start things off, this is a sort of traditional panel we do at these conferences where we sort of set the scene and talk about the outlook for the market in metals and mining this year. And we're very lucky for this panel to have a selection of individuals from around the world, from all the key markets for the mining industry. So I was sort of thinking we could talk to each of our panelists to get a sort of flavour of what's going on in their individual markets. Warren, you're sitting closest to me. Before we get into how the mood is in Hong Kong, and also I'm going to ask Warren to represent Canada for us today as the Canadian on the panel. Queen's Road Capital, Central Capital. Last time you were at the conference, you were CEF Holdings. What's the difference between the two?
Well, thanks for that introduction, Leo. So CEF Capital, as people in the room might know, I was chairman and CEO of that entity for the last 10 years. CEF was always 50% owned by CIBC, the Canadian bank, and 50% owned by Chung Kong. Post-financial crisis, bank regulators have been trying desperately to get all banks, and certainly Canadian banks, to exit principal investments of any kind, never mind principal investments in developing mining situations, which is what CEF was all about. So over the course of last year, CIBC decided to exit CEF, so we've wound up CEF. I've established Queen's Road Central Capital as a new financial entity. Queen's Road will do precisely the same thing that CEF did. Chung Kong will continue to invest in various projects. So basically it's continuing CEF, but without the involvement of a Canadian bank as a partner.
And to make things easier, if people want to go and see you now, you're still in the same building.
Chung Kong Center, still be there, so you can come and see us.
A couple of floors difference or something.
Couple of moving down the 20th floor, yeah.
Fantastic. So, Warren, mood in Hong Kong.
Mood in Hong Kong, as everyone in this room would know, is all about the trade dispute. We saw the Hang Seng fall from 32,000 down to 24,000, 25,000 in a very short period of time. Things got very bearish here very quickly, much more quickly than was appreciated in the North American context. I mean, obviously, if you have a trade dispute between the US and China, who is going to feel it immediately? Hong Kong is going to feel it immediately. So the baby got thrown out with the bathwater. All stocks got hit, whether they were good, bad, whether they were affected or not affected. The mood changed immensely. And now we're in a bull market because there are rumblings of a trade agreement. So all the stocks are moving up, and now China is the best performing market on planet Earth, and Hong Kong is being dragged along with it. Whether you believe that or not, whether you think you're going to have a trade agreement, the fact of the matter is sentiment is driving this market and has done so for the last 6-9 months. And that sentiment is currently extremely bullish. Is that a sign that we should all be piling in? Well, I don't know. Do you believe that we're going to have a trade agreement between Mr. Trump and Mr. Xi? And if we do, what's next? Because we could very easily have a trade agreement agreed, and then Mr. Trump will come up with some other issue that he's not particularly enamored with, and then the markets will go into another tailspin. So it is certainly volatile. It's great for traders, but from a fundamental perspective, there's certainly a lot of uncertainty. Canada's been tough. Canada has suffered as a result of this trade dispute. Resources have been tough. We have been talking for the last couple of years about flight of capital to other alternatives. It was crypto a year and a half ago. Obviously, marijuana has still had a great run. It is very tough for people in this room to raise capital for developing mining situations. Oil and gas business has been tough. The market has been very difficult in Canada. It's great for people like me that run pools of private capital. They're investing in the sector. We see lots of opportunity, and we're not fighting against public markets. The only excitement we've seen in the world for the last couple of months is the reorganization at the top end of the gold sector, and that's been a little bit of excitement, but it really doesn't impact anyone in this room. Maybe if you were a Gold Corp shareholder and you got your 14% premium, that's really exciting. If you were a Randgold shareholder, you got 0 premium. So it really doesn't impact anyone except perhaps for the CEOs who are walking away with tens of millions of dollars, something that should be the topic of another panel discussion at some point. But for people who are actually in the business of developing mines, exploring for mines, building mines, it's still a very tough environment in Canada.
But with the public markets being a bit depressed in Canada, you mentioned obviously this creates opportunities for offshore investors to get over there and to pick up some high quality assets. I mean, we're hearing that Canadian companies are now looking to go to places like Australia to Sydney to find capital. Is that a trend? And then you've got some of the gold companies in Australia who've had a good run of their stocks of late, looking possibly at buying some of the mid-tier companies in Canada. Is that a trend you're seeing?
Definitely you're seeing that, and perhaps Andrew can talk more eloquently about that. But certainly the Australian market has, for whatever reason, been somewhat more robust than Canada. Maybe it's because there is a little less lack of alternative in terms of destinations for investment in the Australian microcosm versus the Canadian market. But no question, there has been a flight of capital towards Australia. The Australians have been, generally speaking, performing better than their North American peers, and so that opens up opportunity for investment inbound into North America from these relatively strong Australians. So definitely a trend that you've seen, and again, a reflection of the fact that how tough it's been in the North American context for the Canadian miners.
Do you think the Huawei story still has something to run? I mean, it obviously affected.
It has a lot to run. That has been a huge development. Obviously, never a day goes by in Hong Kong where there isn't another article on the story of Meng Wanzhou. It's less of a story in Canada. In Canada, we've moved on to the SNC-Lavalin crisis, if you follow Canadian politics. So Huawei has been pushed to the back burner in terms of profile in the news and impact on the Trudeau government. But the Huawei story has a lot of runway in front of it in terms of development, not just the trade implications of it, but the political ramifications and the impact on Canada-China trade. There's still a lot of risk involved there, and we haven't seen the end of that story, and frankly, it's not a good story.
I mean, we've had a couple of companies contact us to say, if we're coming to Hong Kong, are we safe as Canadians? As one of the 300,000 Canadians who call Hong Kong home, do you feel at any risk of arbitrary imprisonment?
I don't feel at risk, but I'm not important. If I was important, I would definitely consider, and obviously a number of the major Canadian corporations, their internal security consultants have suggested a travel ban in China. So certain CEOs, major CEOs in Canada, will not travel to China currently. That is very disappointing. It obviously has a tremendous impact on Canada-China trade if CEOs can't talk to one another. We had a Asia Mining Club lunch last week where the CEO of Goldcorp was in town, and he was leaving that lunch to go to China. So obviously he felt safe and wasn't concerned. But I know there are other CEOs who simply will not go in the current environment. So it's just, again, a reflection of the level of tension.
But are some of those companies making the same travel advisory to Hong Kong as they are for the mainland China?
No. Hong Kong is considered completely safe and different basket.
Exactly. Just want to reiterate that message out there.
Yes.
George, Warren mentioned that Hong Kong obviously went into a sort of state of panic and despair, but is now roaring back. How's the mood in China with regard to the trade war and a possible resolution?
Okay, so thank you for the question. Actually, I would like to bring 2 slides to you ladies and gentlemen. One is we talk about the number 13 National Congress. What's the information we have? What's going on with Chinese cooperation and economic development in China's economy in 2019? The first is we see the growth target revised down to 6.5. And also supply side reform will be kept going. And also even have a further development. And also another one is the modest fiscal and monetary policy stimulus to continue into 2019. That's very important. That's because people pay a lot of attention to RMB, globalization of RMB, and also the effects between the RMB and other currencies, for example, US, for example, Euro, and even Canada and Canadian dollars and Australian dollars. Nowadays, Canadian dollars and US and Australian dollars give us a lot of encouraging in terms of cost control. That's good. But also sometimes not so good. And also, another one is the newly announced stimulus in the school towards industry, try to develop the real industry, to put the currency, put the financing resources into the industry instead of other steps of the chains, get a better life for the peoples. And also another continues to be market opening up for the foreign entities. You know, that because of the wars, trade wars, because of some other discussions going on, not only between China and other countries, with a continuous open door and open opportunity for foreign entities. So they get more opportunity to have business in China, not only in Hong Kong, but also mainland China, even bigger market. And also, there's one thing, we got another slide, talk about the trade war. Getting back to your question. So you see, we got world economy concerns and surprise for 2019. The longest, this trade war, we see that in the upside 70%, in the downside less than 50, less than 60%. So we see the two sides. In one hand, we will get announcements say major issues will get a consensus between China and US, but talking still going on. So we see the positive side, not only for US but also for China. In the long run or even in the near term, the people will get more opened. One is talk about the key things in my mind is the philosophy. In China, we say, okay, the people get more resources together to deal with one key topic. For example, in Beijing, we have a very good Terminal 3. That's good enough. That's because we put all the resources, try to get one project. Brilliant. In that case, we can get a better project. In another side, we say, okay, is need to have a transparency of the market. Need to have some equal business, equal opportunity for different entity. For that kind of argument, not only that's just one example. So we see both sides more positive than negative.
So it sounds like they're making all the right noises. I mean, the Brexit no deal you've got on the downside there, you can probably scrub that off now, can't you?
Oh, that's quite funny. When I'm in London, actually, I spent 2 days in London. That 2 days, just they have a voting. The first voting, we say, Theresa May say, let's do this way. They say, the voting say, no way. And then the second voting say, what about no deal, Brexit? We said no way as well. So nowadays, what's going on? Personally believe it will be extended the period to continuous discussion will be, of course, long-term, long period extension may be benefit not only for UK but also for Europe. If it's just a short-term extension, it's meaningless.
I think
even stressful.
She's asked for June 30th, I think, is the latest date I've heard. I think the longer it goes, the less likely it is to happen. But maybe Scott will have some thoughts on that.
Not really, actually. Who knows what the politicians are going to do? I'm Australian, but I've been living over there 22 years now, and it's quite embarrassing, to be honest, to see what is going on and how the negotiations have been happening. I agree. I think it's going to be delayed. I think that it will happen. I think the impetus to go back to a second referendum or even just to stay in the European Union won't happen, because that will just be extremely damaging, but I think politically for the country. Because if you have a second referendum and the Remainers win by 2 points or even 4 points, what then? Do you then, okay, let's go for a third referendum, let's get the best out of 3, right? And why should the second referendum, if you win by 4, out-trump the first referendum, which you won by, but the Leavers won by 4? So it's one of those situations where a second referendum, highly unlikely, I think, and therefore it will be an extended Brexit to give more time for both parties to come up with some answers. But you can't be guaranteed.
I suppose it depends on the wording of the second referendum, whether there would be one or not. Because the first one was in or out, but out wasn't really explained. But we probably shouldn't get into a Brexit debate on this particular panel. But tell us a little bit about what's the mood in London at the moment in terms of investing in metals and mining.
The mood in London, I would say it's quite neutral at the moment, because everything's dominated by Brexit. Literally, I mean, everything is dominated by Brexit. No one knows what's going to happen. And when I think of London, I think of the European investment market as well, because a lot of people come through London, then go on to Germany and places like that to tap capital. And while the Brexit negotiation is going on and while there's no decision there, people aren't doing anything. There's not a lot of liquidity. People are concerned about what's going to happen domestically and in a broader sense, a bit more domestically into Europe. What's happening in the mining community and what's happening with businesses, with companies that have got businesses in Africa or Latin America, no one cares really. So I don't think there really is a strong view one way or the other. It's about bunkering down and waiting to see what happens.
So from your point of view, you just like to see it over with as quickly as possible?
Oh, absolutely. As far as we're concerned, make a decision, one way or the other, let's get on with it. This indecision is killing everyone, really, because you can't make plans, right? You have to wait to see what the outcome is, and you can't plan for the future until you know politically where you sit.
But I get the feeling that London will work it out either way, and they'll be fine.
I agree. I think one thing about the British people and one thing about London particularly, they're very dynamic, they're very resilient, they are very open to change. We have a society, thankfully, that is open to change, will change, can change. And I think you're seeing a lot of that already. A lot of the small businesses are preparing for a no-deal Brexit, no matter what. I think we're going to see in the UK a bit of the Y2K issue, whereby planes were going to fall out of the sky when the year 2000 came around. Computer systems were going to die immediately upon the clock ticked over to 2000. I think that if Brexit were to happen as a no-deal Brexit, there would be short-term pain. But would the country come to a grinding halt? No. It is the 5th largest economy in the world. It's the 2nd largest economy in Europe. If it was the 100th, yes, it could just capitulate. But you're dealing with the 5th largest economy in the world, the 2nd largest in Europe. It's got a strong service industry and an industrial industry. It will suffer short term, but I think the one thing I will say about the Brits, having lived there for 20 odd years now, they're freaking resilient.
Fantastic. Andrew, tell us a little bit about Australia. How's the Australian gold miners, gold producers seem to have had an absolutely stellar run and are now wandering around the world looking for things to buy, possibly. What's your take on how Australia is feeling at the moment?
Yeah, thanks. I think the Australian mining equity market is sort of bipolar a bit. You sort of got the Aussie gold producers, which are doing extremely well, and Warren touched on a few of the reasons why that may be the case. 1,300 gold and a 70-cent Aussie dollar helps a lot, obviously. But I think operationally wise, they've been performing above expectations. Balance sheet management has been, very disciplined, which is what a lot of shareholders have wanted to see for a long time in the gold space. I think compared to Canada, there's a lot more deemed alignment with management teams and shareholders, and a lot more respect for the general retail shareholder out there. It's true we don't have a crypto, we don't have a pot, market to drain the retail shareholders away, but I don't think that can be really the reason why gold equities have done so well. And then you look at iron ore and the very sad developments that are happening in Brazil. So obviously it's going to be more supply disruptions down the track. So stocks like Fortescue and Babarczy and Rio Tinto are also doing very well. Coking coal at $200 makes a big impact in Australia. So if you look at those three sectors, they're doing very well. And then you flip to exploration and development project, and it's very hard to go raise $10 million to do simple project development work. So we're not seeing that money really flow from the big end of town into the smaller space, which has to be corrected at some point.
Why aren't you seeing that? What's the ceiling or the glass floor or floor in that?
Yeah, from my perspective, it's simply doing the calculus of being a shareholder in a development story and working out what your resulting economic interest in that project is going to be after it is fully financed and cash flowing, and then working out if that is an appropriate reward for the risk you're taking. So you've got to play out all that maths, and there's 1,000 variables that go into it, but it's just a question of, is it worth taking that risk? And a lot of the times, you look at the projects that have been constructed over the last couple of years, and the existing shareholders going to construction financing have probably got the bad end of the stick, essentially. So until those shareholders are rewarded and the M&A market trickles down and there's cash being recycled in the industry, I can't see it changing. But it does have to change, otherwise there's going to be no development project and the cycle's just going to get out of control again.
Are you expecting more M&A to kick off? I mean, we've had these big M&As in North America.
Yeah, you obviously seen the top end of the market, and you saw Newcrest with Red Chris the other week. So that is happening. When it filters down to the mid-tier and then the juniors, to be honest, I'm not too sure. I think the Canadian gold guys are going to be shocked at the equity valuations of some of these Aussie gold guys if they come looking this way. And I think the Aussie guys looking the other way are going to continue to be disciplined. Now, I could be proven completely wrong, but I'm not expecting a huge wave of gold M&A, but if gold jumps to 14, I think 1,400, that will probably change pretty quickly as well.
With these, with the coal producers in Australia doing well at the moment and generating a lot of cash, but maybe not able to develop too many new big projects, do you think in the long term you may see some of that cash flowing from the coal producers into other metals and minerals which are more sort of suitable for the future?
Yeah, if you look at the coking coal trading companies on AS, they're literally trading at 20-30% cash flow yields. Now, that either means you don't believe the coal price is going to stay up or something else, but they look pretty attractive to the average shareholder today. And the situation isn't going to correct itself shortly. Developing a coal project today has never been easier, but it's never been harder, I apologise, especially in Australia. We own a gold development story in British Columbia, which is in the permitting phase now. And that's going well, but it's a long, hard slog. It takes time. So you can't, the supply response in coal is very, very lagged. So I can't see these coking coal prices coming off aggressively in the next 3 to 4 or 5 years. Global economies aside, they're going to stay up there. So these producers producing these cash flows look very, very attractive. Permitting a coking coal project or any coal project in Australia is mind-bogglingly difficult today.
I bet. I mean, this brings us on to the next sort of topic, which is which commodities you like the look of. We've mentioned a few here with, obviously the Aussie gold producers have been doing well. You've mentioned coking coal. Warren, what's your favourite commodity of late?
I don't know if I have one of late. I think the one metal that my view has changed on in the last 6 months, and I think everyone's view on it has changed, is gold. I have stayed away from the gold market for the last 3-4 years, being a firm believer that we were going to have significant increases in real interest rates. And the Fed has been telling us that year after year after year. And you don't fight the Fed. So when they come out and tell you we're raising interest rates, I believe you, and I'm going to stay away from gold. And in the last 6 months, the Fed has changed its tune completely. We've gone from an era of rising interest rates, and significantly rising interest rates, to most forecasts suggesting that there won't be a raise this year. There may not even be a raise next year. And we're looking at flat rates right out until 2021. And we're looking at flat rates in a reasonably strong economy, so potentially negative interest rates around the world. That changes the environment for gold 180%. It just is a huge change. So my view of gold has become much more positive in that environment.
What sort of price do you think we can get?
The frustration, and I'm sure the frustration for everyone in this room, is that the grand reward for a massive 180-degree switch in sentiment in the gold market is we go from about 1,200 to about 1,300, and the excitement's over. We don't have any volatility. Gold now for what, 7, 8, 9 years has been flatlined basically between 1,200 and 1,300. If you look at the 10-year moving average, if you look at the 10-month moving average, if you look at the 10-week moving average, it's all the same. It's flatline. We've got no volatility. It's hard to get new people in this room unless we get significant volatility. It's hard to get new people in this room if we have a 180-degree change in global sentiment and the gold price doesn't move. So your question is a valid one, which is, okay, your view has changed. What's your forecast for the gold price? It's still hard to get excited about the gold price when you're not seeing any movement in the price to reinforce your belief. So notwithstanding the fact that my view has changed, I can't really say that I'm a roaring bull in the gold, because I don't see what's going to move it. We've got geopolitical risks all over the planet. We've got negative real interest rates. We've got massive central bank buying in the last 6 months. And the gold price isn't moving. So I don't know what it takes to move it. Clearly, something that we all haven't thought of, and the risk is probably to the downside. That's my concern.
George, your company's investing or looking for new gold projects. What's your take on the gold?
Yes, you already said a lot about the gold. I just said, in terms of gold, I just want to say one sentence. I got one sentence is, I got a mandate for gold this year, just this one. But another two metals get the same, also get a lot of change, but in different direction. One is coupled. You know, the coupled price notice getting from very high end, and then now it's around 15, 14, 13. So now it's good. Now two things. One is margin will be get slim, but at the same time, it's a good opportunity for think about it. Another one is a quite interesting one. Is a nickel. Nickel is a niche market, but getting higher and volatile, more volatile. So Jake, maybe you can pay attention to nickel and coupled instead of gold. Gold get higher and higher and higher. How you get a return?
Well, nickel and cobalt, both obviously in the batteries sort of space, although nickel mainly obviously for stainless steel. Andrew, you mentioned that some of the Australians, obviously gold is good in Australia, but some of those battery metals guys, how are they doing these days? And what's your take on the overall outlook for battery metals?
Yeah, we obviously given battery metals a fair bit of forward over the last couple of years. We have a very long-term view when we make investments, so sort of a 5-year time horizon. But we really have to take a 10-year view when we're going into these things, because in 5 years' time, we're potentially going to be selling it to another person who has a 5-year view as well. And where we do struggle on some of these battery-related commodities is the demand side we buy into, obviously big error bars on it, but that is where the world is heading, undoubtedly. What the supply response is going to be on some of these commodities is what we struggle to do with any conviction. And there's a real concern that the lithium cobalt response in 5 years is going to be savage, and it's going to have a huge impact on the price. So we can't make those sort of long-term bets, and if there's hot and fast money flowing into the sector, we just sort of stand back and watch. I think nickel and copper, which is a huge battery metal in itself, are very interesting, and would love to get more exposure into projects along those lines. But no, we to summarise, we're probably steering clear of the sort of the more purely battery metal, commodity-focused metals.
But overall, believing the thesis of the EV revolution and everyone's going to be driving an electric car.
Absolutely. But that's the demand side of the equation.
Yeah.
What we struggle with is what's the supply response going to be over a 5-10 year period.
And Scott, what's your take on the mineral to look out for, or the one to steer clear of?
Well, I agree in terms of the theme of the EV. I think the demand for those metals are there for the long term. I think they're driven a lot by China, but also you're seeing across the world demand for electric vehicles. So I think there is, and I totally agree with your point regarding the supply side. The demand is there, big error bars, but the supply side is the big question mark. Do the brine suppliers for lithium out of Latin America just drown the market out, and all the hard rock suppliers get crushed? Who knows? Cobalt goes hand in hand with that. In terms of the other metals, gold, I don't know where gold trades. I've been so wrong predicting gold over the years. When people ask me what's my view on gold, my view is to trade where it trades. That's it. No view at all. I think the base metals, though, the more industrial metals, I'm probably more bearish those going forward. I think that, and a lot of that bearishness comes down to the growth in China. China is, I think, in a cyclical sort of slowing down. It's it's becoming a mature economy. The $1 of investment 30 years ago drove $4 of GDP. I think $1 investment today might drive $1 of GDP, or maybe less than $1 of GDP in China. So you're seeing a tipping point from being this credit-driven sort of industrialization, infrastructure developing sort of economy to one that is more going towards consumerism, more like a more mature economy. And as a consequence of that, I think the demand for base metals, industrial metals, is going to be tamed a little bit. So I'm not so bullish on the base metals going forward.
But even with electric vehicles requiring all the copper that they need and all the infrastructure that would be required for the charging stations and all that stuff,
yes, that's going to be there, but I think what you trade that off against is the decline in demand for the industrial usage, in terms of building power lines and building buildings and things like that. That's going to come off a lot, and some of the slack is going to be picked up by the sort of the electrification, let's call it, of sort of transport. But I'm not sure that will be able to pick up all the slack.
Interesting. We have only a couple of minutes. Do we have any questions for our panel? Question at the front here.
Hi, this is Jack Young from Canada China Global Resource Fund. So I have actually 2 questions for George. One is, what's your next step for Zijin? What's your focus? Since you have acquired a lot of resources level assets, now next step is your, on the producing assets or still on the resources expansion. Second question is you were mentioning about the reform. What does it mean, the reform to 资金? Because I heard this word on newspaper every day. It never happened. So does it mean that you have big bonus for your acquisition, or please expand a little bit about that?
Thank you, Jake. Thank you very much. It's a very good question. The first, in terms of gold. So for next month, of course, we got a mandate. Go ahead with gold. Of course, if we say ideally, sometimes the life is always not ideally. We're talking about ideally anyway. The production assets. The second, we hope is a kind of middle to large scale. How defined middle to large scale? We defined as one parameters is a production. So for example, the production will be, we hope is higher than whatever 200 or 300,000 ounces a year. Let's we say middle. So for that kind of opportunity for gold. So and with time goes on, we already have some ideas, some talking. When I was in Miami, we have a different meeting with different friends, and also our chairman Chen have spent time in Toronto as well. So we already have some communication with the industry. With time goes on, we're still open for more opportunity. At the end of the day, we hope we can achieve something with the help of Jake. And also another one, a question related to reform. Two things will reform. One is, as you mentioned, the strategy, the pattern we approaches we do investment. There is interesting case study. It's happened in Hong Kong. It's anti-sports. Actually, we have some case study. Those guys did a very good job between the industry player and capital PE fund. We hope, Julian is an industry player, Jake, you are in the PE side. We follow the, not only Jake, you are the representatives of a PE fund. Of course, I would like to spend more time with you and with you guys to see the opportunity to set up a consortium. Maybe I got slides. Yeah, we got for example, Anta, they have a 5.7 billion transaction. 2.7 billion is from the equity and 3 billion from financing. But within the 2.7 billion, it's a combination between the Anta industry player and PE fund. It's a very good example. The first, why we think about that way, that's because two things. First, we think about try to make our balance sheet looks better. Second is in the long run, we need more high quality investor in our A-share and H-share stock market. So one of the exit approaches is we issue shares to you guys, and then you are at the end of the day, not only from the project level to the corporate level, you are one of our shareholders. If of course you want to sell, you can sell it in the market, or you can get money. So that's one reform. The second reform in the Gijin is we are nowadays we try to improve our internal structure. Originally, Gijin mining is 25 years ago from one single mine, Jijinshan copper and gold mine. It's the administration and management is the system is from Chairman Chen. Nowadays, from very beginning, from one single mine company. Nowadays, to the middle tier, we call ourselves middle tier company. The market cap 14 billion US dollar. And in this kind of a company, we need to change, improve our administration and management approaches. That's another reform. Try to learn from international company to make a combination between the best practice of global company and also advanced elements of Gilman plus the project reality. So that's the second reform. Thank you.
Sounds like you've been hanging out with Robert Friedland too much and got some inspiration. He's gone out of mining and he'll be doing Hollywood blockbusters next. And we'll see. Look forward to the next Crazy Rich Asians from Zijin. That came across a bit odd, but anyway. Thank you very much to our panelists. That's been a wonderful insight from various markets around the world. Can I have a massive round of applause for our opening panel?